Trading indicators are often touted as the holy grail of trading, but that's simply not true. They're a useful trading tool that should be used in conjunction with a well-rounded trading plan, but they're not the plan itself. So I want to cover the uses of trading indicators, indicator selection, and two really simple trading methods that you can expand on. Now, whether you swing trade or day trade or position trade, too many indicators can equal complexity, which usually equals a lack of consistency with your trading decisions. Information overload is often the result of traders finding a mix of day trading indicators potentially useful, but in fact don't really help in the trader making a profitable decision. Now, I've used trading tools in different combinations over the years, and there are three that I found to initially be the most useful indicators for how I like to trade. And as time went on, simple became my mantra, and as a result, my trading decisions were clearer and were made with much less confusion and stress. Now, almost every charting platform comes with a host of indicators that those who engage in technical analysis may find useful. You simply apply any of them to your chart, and a mathematical calculation takes place, taking into past price, current price, and depending on the market, volume. Now, the information that's presented to you via the indicator can be broken down into trend direction, momentum or the lack of momentum in the market, volatility for profit potential, and volume measures to see how popular the market is. Now, the issue becomes using the same types of indicators on the chart, which basically gives you the same information. Now, while this may be explained as simply looking for a trade confirmation, what it really does is give you conflicting information as well as more information to process. A simple example is having several trend indicators that show you the short-term, medium-term, and longer-term trend. From a multiple time frame perspective, this may appear logical. Many traders, though, they can attest to seeing a perfectly valid setup negated because of a trend conflict and then watch the trade play out to profit. Too much information can cause analysis paralysis, which can keep you from making trading choices that are actually profitable ones. Now, looking at just the trading range portion and price relation to the moving averages, we have, number one, price below longer term average, which means short. Number two, price above the medium term means long. Price above the short term means long. Now, not seen on this chart, but the pivot black candle below number two is actually a retrace into an area where a long trade was the call, yet all trading indicators called to short at that time. Now, that is the main drawback with most trading indicators, and that is they lag price. Now, a trend indicator can be a useful addition to your day trading, but be extremely careful of confusing a relatively simple trend concept. Now, here's a question for you. Day trading involves quick decisions. Would your trading be better served by simple or complex information gathering? Now, useful is subjective, but there are general guidelines that you can use when seeking out useful indicators for your day trading. Now, one simple guideline is to choose one trend indicator, such as a moving average, and one momentum trading indicator, such as the stochastics. Now, in order to explain how these can be useful as day trading indicators, let's take a look at this chart. Number one, in brief, this is a pivot area where price broke through and rallied hard away from the moving average. Number two, price starts to trade above the moving average, as well as the slope of the indicator is up, and our plan says the trend is up. Number three, price returns to the area marked number one. It's also a complex AB equals CD retrace. Number four, the momentum indicator crosses, turns up, and we buy stop the high of the candle that turned it. A simple selection of trading indicators mixed with chart technicals can be the basis for your trading system. So do indicators work? Well, it all depends on how they're put together in the context of a trading plan. Some of the most used technical indicators, such as moving averages, MACD, and CCI, they work in the sense that they do their job in calculating the information. But the power of the indicator lies in how you interpret the information as part of an overall trade plan. So don't be sold on the holy grail indicator that marketers just flood your inbox with. Proper usage of basic indicators against a well-tested trade plan through back testing, forward testing, and through demo trading is a pretty solid route to take. Now, all the systems that are offered by NetPicks, for example, not only come with tested trade plans, but also hammer home that you must prove any trading system or trading indicator to yourself. Now, there's always a downside when searching for trading indicators that work for your style of trading and your plan. Many systems that are sold use standard indicators that have been fine-tuned to give you the best results on past data. Package it up, sell it without taking into account changes in the market behavior. Now, the backbone of many trading systems are very mechanical in the sense that if A happens, you do B. Now, there's nothing wrong with optimizing to take into account current market realities, but your approach and your mindset in doing so can either have you being realistic or over-optimizing out of the realm of reality. One way you may choose not to fall into the over-optimizing trap is to simply use the standard settings for all indicators. This ensures you're not zeroing in on the most effective setting for the market of today without regard for tomorrow. As I mentioned earlier, there are 3 indicators which I have personally had really great success with over the years, and it's pretty much how I started trading. My trading has evolved as I began to understand other aspects of trading, but these are where I started. Number 1, Fibonacci. Number 2, moving averages. And 3, CCI, the Commodity Channel Index. Now, for the sake of consistency, I'm going to use the same chart as I previously did. This is a day trading, swing trading chart of 1 hour on a forex pair. Now, this zone, number 1, was determined once the swing high was in place. It's a combination of the Fibonacci retracements and expansions, which I use for symmetry. Number 2, this is the moving average, which is used for objective trend determination. A short-term setting will give you faster trend changes with more whipsaw. Now, a longer-term setting can have you miss a large portion of the current move. Number 3, once the CCI comes close to or crosses the 0 level, a buy stop is placed above the high. You can see the trends up and prices retraced into an area that I'd be interested in taking a trade. Once price hits the area, there's a potential setup, but a trade trigger is needed to get into the trade. The Commodity Channel Index plus price moving in the direction of the trade is the needed trigger. I purposely have left out the exact rules in the settings, but here's a hint. The settings are standard, so you can design your own strategy using your current trading knowledge. This exact setup is applicable to day trading, swing trading, and even position trading. So to summarize, the moving average determines the trend, and it can be part of the process in triggering in a trade, and momentum plays. Both are not described here. Fibonacci, to determine in advance of price zones that I may be interested in for a setup and possible trigger, and they can also be used for profit targets. CCI, used for trade triggers, but it does have many uses, including trend determination. So as you can see, these were the 3 most useful trading indicators for me at a certain point in my trading. Times change, and what was useful then may not be useful for me today. Every trader will find something that speaks to them, which will allow them to find a particular technical indicator useful. Whatever you find, the key is to be consistent with it and try not to overload your charts and yourself with information. Simple is usually best. Determine the trend, determine setup, determine trigger, manage your risk. And to see trading indicators used in a complete trading system, you can download the free version of Trend Jumper.